Yeah. So the question that we are given, we are given question number 2. It says the following is the trial balance of Mwamba as a sole trader as at 31st this October 2021. So you have that data given, right? So this is the data that we were given. And after being given with this data being provided, there was an additional information. And so the information that was added was the inventory was valued at 101 at 31st December 2021, which is the end of the period. At the end of the period, the inventory, being the closing inventory in this case, obvious, was 105. And the provision for doubtful debt as at 31st December, the closing inventory for doubtful debt should be adjusted 5% of outstanding receivables. So the provision for doubtful debt should be what? 5% of the outstanding receivables. That is what we have been given, 5% of outstanding receivable. So the provision for doubtful debts is also called the allowance. Allowance for what? What is the other name? Allowance for what? Okay, allowance for receivables. Okay, so the provision for doubtful debt is also called the allowance for receivables. Then you are given the salaries and wages accrue. These are accrued expenses. We know how we treat the accrued expenses. They are added to those respective expenses in question. And you have the rates and the rent prepaid. These are prepayments. So with prepayments, they are subtracted from the expenses in question. So for example, this prepayment of rent and rates, so you subtract this 20,000 from the value of rent and rates. So I've said that accrued expenses should be added to the expenses, right? Then the prepaid expenses or prepayments, they should be subtracted. Yeah. Then you are also given the information that the depreciation on non-current assets should be provided as follows. So on plant and machinery, it should be 10% per annum on a straight line basis. So on a straight line basis, this is depreciation. We know that depreciation is an expense for us. And also we have, what is this? We have depreciation on motor vehicles being 20% on a reducing balance method. We are asked you to prepare a statement of profit or loss, and at the same time to prepare a statement of financial position, which is also called the balance sheet. Okay. Now, whenever you're given such questions, the first thing that you do after analyzing data, you have to look at additional information, because some of the additional information, they affect the trading account. Okay. The trading account is the part that starts from the sales up to gross profit. That part in between, there are some adjustments or some additional information that affect that, that part, which is called the trading account. So we have to start with these so that we identify those adjustments and make them in advance. Then the rest of these other adjustments, they affect other income, like provision for doubtful debt. This one, it does affect the other income. So we will calculate it, and then the expenses we'll calculate them under. We'll put them under the expense column where we put them, and that is about the question. Okay. Assuming that now we understand the format properly and we have been going through the format, let me just show to you the statement for this question. Let's start answering this this particular question. Okay, just a minute. I quickly locate the question. Yeah, we want to do the profit and loss statement for this question. Okay. Okay. So let me do this. Okay. I'm trying to share the screen now. Are you able to see the screen?
Yes, sir.
Okay. We continue. It's also important that I check if the class is being recorded. All right. Okay, so let's go through how to we make the profit and loss statement, which is the statement of what comprehensive income, or the statement of profit and loss, another comprehensive income. So I said it always has the title. The name of this sole trader is what? Mambazi. Mambazi is what? Statement of what? Statement
Profit
of
and loss.
profit and loss. Thank you. The statement of profit and loss, and the other comprehensive income for the year ended. For the year ended when? 31st October 2021. Is that clear?
Yes, sir.
Okay. So we always start with what? We start with the sales, isn't it? Let me put the statements. Like start with the sales. The sales or revenue. So we're going to look for sales or revenue. It's the same thing. Are you able to locate the revenue? Right. So the revenue is up here is 1,441,220. 1441,220. Okay. So it is 1441,220. Is that clear?
Yes, sir.
Then from that, what do? We less what? Returns inward, isn't it? Or sales return. Do we have returns inward?
No.
Have you looked at the statement correctly? Look at it. Are you able to see the returns inward?
Yes, sir.
How much is the returns inward?
12,700.
12,700. So the returns inward is on the debit side. Get that one. So you less returns what? Returns inward.
What about the one on the credit side?
It is the returns outward. The question just says return. Okay. So this is the returns inward that we want here. And how much is the returns inward? 127,000, like that. So what is our net sales?
Carriage inward.
Let's find the net sales first. Let's find the difference. What's the difference? Right. Sales or revenue minus returns inward. The net sales giving us 1,428 and 520. That's what I'm finding from here. Then from the net sales, what do? We less the cost of sales, isn't it? We less cost of what? Cost of sales. And now under the cost of sales, is where we are going to less to start with the opening stock. You start with the opening stock for the cost of sales. Opening what? Opening stock or opening inventory. Let's go back to the question and check the opening inventory. How much was the opening inventory? It is not labeled as opening inventory.
95,200.
95,400, isn't it? The inventory at 1st November 2020. So 95,400, that's the opening inventory. So we'll have 95,000, 95,400. Right. What do we do? To this we add what? What are we adding? We're going to add the purchases, isn't it?
Yes, sir.
Yes, add the purchases. Let's add purchases. Where are the purchases? Let's look for the purchases. Are you able to see the purchases? Just after the opening inventory.
800.
800,000. Right. So you have 800,000 as the purchases. 800,000. Then afterwards, what do we do? From the purchases, we less what? Returns outward, isn't it? Which is purchases return. Returns outward is also called purchases return. Right. So what is our purchases return? Oh, I need to show you the question. The purchases return. Are you able to see the returns? Is that part where they return? There are returns. So they are not labeled as returns outward or inward. Then the part that is on the credit side, that the purchases outward, 22,800. 22,800. Right. So what do we remain with? We can add everything. From here, what do? We less the closing stock, isn't it? We less the closing stock. You know, my board is not enough the space. Closing stock. Let's less the closing stock. That's all. What is the closing stock? We said. What was the closing stock? We can move a little bit faster. What was the closing stock?
$105,400.
105,400. Okay. So the way how to know, how you can know whether the inventory is the closing or opening, just look at the dates. Okay. This trial balance was extracted on 31st of October 2021. That was the closing day. Then the opening inventory has shown you that on 1st November 2020, which is the previous year. Just look at the dates. So this one will be the first inventory, the opening one. Then this one at the end shall be the what? The closing inventory. Right. So you have 105,400. So when you add everything and take the difference shall be pushed in the last column, and it gives us how much? Add everything. These are positives here. Then the other ones are negative. Just punch them the way how they are appearing.
922,695.
I do doubt. 95,400 plus 800,000 minus 22,800 minus 105,400. You can command your calculator. Hello? Just command your calculator again. My calculator is giving me something different.
76
76
7,200.
7,200. I find the same here. So this value should be subtracted from what? Hello? You are subtracting this value from what? Hello?
We're subtracting it from the 1,400.
Yes, from the net sales, isn't it?
Yeah.
So that you can get the gross profit. And what is our gross profit? Subtract this value from the net sales here. You get the gross profit. Right.
So 661 320.
Okay. 60 or 6061 320. Is that?
Yeah. Yes.
Okay. This is our gross what? Our gross profit down. For the sake of the space of my board, allow me to erase this and add something else. Right. Okay. I can erase. People have given the go ahead. Right. Okay. So we have the gross profit, isn't it? And so the gross profit, you said, is 661 320. Okay. What do we do? What does the format say? From the gross profit, what do we do from here? Just follow all the formats I've been giving you. You know the formats are there. So I made many presentations about the format.
We had any
So
other
what we're
income?
supposed to do next?
So we add the other incomes, isn't it? I said you add the other income. Now,
Yes, sir.
Thank you. So about the other income, you have to go back to the example. I told you that the provision for doubtful debt can either be an other income or an expense. Okay. It can be an expense if it is an increase. So you have to calculate whether the provision for doubtful debt increased or decreased. If it decreased, that will be an other income to us. But if it increased, that will be an expense. I will repeat here because these are the most common. They are the common adjustments that you find usually. Most of the times you'll be asked to make adjustment around the provision for doubtful debt. You have to understand this, okay? So for the provision for doubtful debt, the first thing to do is to assess whether it is an increase or a decrease. If a decrease, then you have to add it under other incomes. If an increase, then it shall fall under expenses. Is that clear? So let's do the provision. Let's calculate for the provision for doubtful debt. The provision for doubtful debt is supposed to be adjusted by 5% of outstanding receivables. So we need to do 5% of the outstanding receivables. Are you able to see the receivables in the question? People are unable to see the receivables.
They're down there. 101,500.
The receivables are 101,500, isn't it? Are you able to see the part which has got payables and the one that has got receivables?
Yeah.
So the receivables 101,500. So you need to do the 5% of 101,500. Okay. Let's do the 5% of 101,500. We are calculating 101,500 times 5%, which is same as 0.05. What will be the outstanding receivables? Or the provision for doubtful debt? How much will be the provision for doubtful debt?
$5,075.
5,075. Okay, 5,075. So now, look, this 5,075 means that this is the value of the provision for doubtful debt at the closing of the books. When we close the books, this will be our value, 5,000 and what? And 75. Is that clear? First of all, is this clear?
Yes, it is.
If this is clear now, we have to assess whether this was an increase or a decrease. How do we assess whether it was an increase or a decrease? We subtract the accumulated provision for doubtful debt. Okay. At the beginning of the period, we have to check the accumulated not depreciation, allowance for doubtful debt or provision for doubtful debt at the beginning of the period. How much was the provision for doubtful debt at the beginning?
$15,200.
15,200. Are you able to see it? People are able to see that, right? Just down
Yes.
the last, yes. So that is the provision for doubtful debt at the beginning of the period. So we have to less this amount, 15,200 from this amount. So 15,200. Can you do your mathematics? What do you find?
$10,125.
10,125. Like this. And it is negative. You've seen? So now that it is negative, you know that
Yes, sir.
this was a huh?
Yes, sir.
Proceed. Is that a question?
No, I was just responding to you.
Oh, okay. So if you've seen that this is a negative, you know that it was a reduction in allowance for what? For receivables, or a reduction in provision for doubtful debt. Is that clear? That is an other income. So you record here the reduction. You record that reduction in provision for what? For doubtful debt. Whatever it is, then you add here, which is 10. Don't put it as negative now. You put it as a positive value. It's an addition. So it should be an absolute value. Is that clear? If you found that this one was a positive value, it would have implied an increase in the provision for doubtful debt, which is also called allowance for receivables. Please have emphasized on that one. Don't start getting confused. Okay. So now that this, if it is an increase in allowance for receivables, it means it's an expense. So you have to treat this under expenses. Is that clear now? Okay.
Yes, sir.
Let's look at other. Do we have any other additional income? You can look, you can just look at
We have discount received.
We have the discount received, and how much is it?
16,100.
16,100 discount received. Right. So discount what? Discount received is an other income. Discount received. And you said it's how much? Let me check. 16,100. Okay. 16,100. Do we have any other income? Things like commission received, rent received, all those are other incomes. Do we have any other income?
So we've got the rent is there, rent and rates.
Rent received. If it is just rent, then it is an expense. But if it is received, it should indicate that the rent received.
Oh,
it means we received the rent as a business.
Okay.
All right. So we don't have any other income. Then we can just total up all of them so that we can have total income. What's our total income? Just add everything now. Gross profit plus these other provisions, or plus these other incomes. What's the total income?
$687,545.
687,545. Okay. So 687,545 as our total income. Is that clear? Let me get feedback from finally.
Yes,
Are you able to follow?
Yes, I am.
And do you have any question? Today I'm in class. I want questions.
No, I don't.
You don't have any questions. Do you have anyone with a question? This is the time to ask questions when the size is still around. Call unto me when I still can hear. All right. It's very important that you always call unto me when I'm still available for answers, for questions. And like you think about calling me when you are in an exam. It's not possible. Okay, away from that, what do we do after total income?
We less expenses.
We less the expenses, isn't it? So I'll write our total income on top here. Again, so total income, our total income, which was 687,545. Okay. And then from here, we less expenses. Less expenses. So now with the expenses, what expenses do we have? I see there is what? There are wages and salaries. We can even start with these for adjustments. So we adjust them in advance. Wages and salaries. You can see the value for salaries and wages. Are you able to see it?
Yes.
112,300. Watch it.
300.
But there is an adjustment. Are you able to see the adjustment? Adjustment number 3. It says that the salaries and wages accrued amounted to 22,000. So I said that accrued expenses should be added. Okay, so you have to add this 22,000 to the 112,300. Is that clear? Right. So wages and the salaries. So we are saying 112,300 plus 22,000. How much is it giving us?
134,300.
134,300 in the second column, because these are expenses. Expenses are written in the second column. No, this should be the first column in the case of 2 columns. Right. Okay. We can still have the rent and the rate as well. They have an adjustment. Rent and the rates. Where are they now? I can't see them. My eyes don't. Rent and rates. Are you able to see them?
Below purchases.
Oh, just below the purchases. Okay. Okay. 88,200. Now we have an adjustment. We are told on adjustment number 4 that there was a prepayment of 20,000 from the rates. So you have to subtract 20,000 from the what? From the 88,200 on rent and rates. So we can write rent and the rates. 88,000. It was what? 88,200 minus 20,000. Right. So what is the difference?
68,200.
68,200. And then we go to carriage outward. Carriage outward, I said it's an expense. Carriage inward is added as cost of what? Cost of good or cost of sales. But carriage outward is an expense. We have 20,000 carriage outward. Right. Their carriage outward, 20,000 is an expense to us. Have to write down carriage outward. 20,000. And then we have stationary expenses. The stationary expenses are 12,200. 12,300. They're just below the cash at hand. 12,300. So you can write down that. Stationary. 12,000 what? 300. We can have the cost of insurance. Insurance is 15,200, just above the drawings or below the stationary expenses. There is insurance, 15,200. Can add that. Insurance is an expense, by the way, to us that may not be aware. Then you have the general expenses. The general expenses. The general expenses are adding to 112. No. It's what? How much is this? Okay. 31,120. 31,120. Right. Then we need to add the irrecoverable debt. Irrecoverable what? Irrecoverable debt or bad debt, right? Irrecoverable debt or bad debt. Irrecoverable debt or bad debt. So there is this statement that says irrecoverable debt written off is 22,800. It's an expense for us. So irrecoverable debt written off is 22,800. What has remained? Or depreciation. We need the depreciation now for these assets, fixed assets. We need depreciation for the motor vehicle, for plant and machinery, and for motor vehicles. We can start with the plant and machinery. Plant and machinery. So let's go back and calculate depreciation to be calculated. What is the provision for depreciation? They are saying that adjustment number 5, they are saying that depreciation on non-current assets should be provided as follows. For plant and machinery, it should be 10% per annum on a straight line basis. Now listen, when they say that it is on a straight line basis, you just multiply the percentage, that percentage given times the cost, okay? The cost of the asset. Plant and machinery, you've seen the cost for plant and machinery on top, just number 3 from top, 320,000. So do the 10% of that. That will be our depreciation. Just do 10%, 0.01, 0.10, that's the 10%. Times the 320,000. So the 10% of 320,000. What is it giving you as a depreciation? What is the 10% of 320,000? Like 0.10 times 320,000.
Should be 32,000.
Right. It should be 32,000. Okay. So someone had asked me to comment on depreciation. Is the person following? Is everyone following? People are following. So that's how you do depreciation on a straight line method. But what about to the other one for reducing balance method, motor vehicles? Just write M and V, motor vehicles. This one is for reducing balance method. So for this one, the first thing is that this percent that you're given here, the 20%, I'm on the adjustment number 5, additional information number 5. This 20%, if it's on a reducing balance method, you have to calculate it on the net book value. So that is to say, the cost of the asset, in this case, the motor vehicles, minus the accumulated depreciation, okay, at the beginning of the period. The cost of motor vehicles, you've seen it, is 200,000. Then you should do less the accumulated depreciation at the beginning of the period for the motor vehicles. How much was the accumulated depreciation for the motor vehicles? If people are following. How much was the accumulated depreciation? It is there on the trial balance. You just speak. Are you able to see the motor vehicles at cost?
200. 200,000.
Put 80,000.
So the accumulated depreciation is given as 80,000. So you say 200,000 minus 80,000. Okay. 200,000 minus 80,000. That is the net book value. Is that clear? 200,000 minus 80,000. What is the net book value?
120,000.
So now that 120 is the one that you do the 120, so or like the percentage of 120,000 times the, what is the percentage? Let me check. 20%. Do the 20% of that, which is 0.20. That is going to be our depreciation. What is 20% of 120? How much is it? Hello, what's the 20% of 120,000?
24,000.
24,000, thank you. 24,000. Right. So from here, what you do is just to add all the what? All the expenses. You add all these expenses here, then their value, you push it to the right side, the last column. And according to my calculations, this is 359. 359,920. Okay. 359,920. This you should subtract from the total income so that you can find the net profit. Okay. So the difference you find is the net profit. What is the net profit in that question then? The net profit. You can just do the subtraction. Find what is this? 327. Giving us 327. 327. 327. 625. So 327,625 as our net profit. And so I call for the question. Is there any question? People having any question?